Hi everyone, thanks for checking out my channel. I'm going to have a look at WTI crude oil today, and mainly setting up two scenarios for next week and some reason why one could be is more likely than the other. So I'll be starting with the bullish scenario 1 here. And the first reason for this is that we're still having production continuing to go down, with the number of rigs falling to 300, extremely low level, and production fall continuing here. So we're now sitting at 11.4 versus the 13. So it's about 10%, not even 10% drop. So I still believe it is not that huge. That's what the market is actually expecting, but it's still definitely significant impact, and it's enough to actually give some hope that the glut might actually reduce and the storage issue might not return. The other point about the production is that the OPEC commitment to production cut seems to be followed through. I don't have like surprises. Russia is a little bit aside, but still no really any warning there that some of the producers might not be actually following through, and so yeah, that's to me a bullish sign. Now moving to the chart, bullish price action on yesterday Friday with a clear breakthrough, 24.5 here. No rejection, and did get even some follow through after that, not even any sell-off. We drop on the 1 hour, we can see that's definitely bullish with a close near the high, so very positive on that side. Wasn't expecting that, definitely, but that's what happened, and we have to consider that to be bullish because I think it is. Now looking at the smart money on that period, when we've been moving up from 32 to 34, we had another increase of the net long position for the managed money, so they are now sitting at a 380k long contract on this, and despite the falling open interest during that period between the two blue lines, yes, we'll definitely see some buying pressure during that time. Now this is the first scenario, and if we look at the chart, it would look something like this, in my opinion. Potentially we could go and top again the 36, but then we would have some consolidation, at least going back down to 34 and 4, and for some more consolidation as we go through the week. I think that's next week, the 3rd, which is roughly midweek, and yeah, we would have the an exit or breakout potentially inside the gap, so a very important area here at that time. So if that's the bullish scenario happening, so the way I would be trading this, potentially shorting that level at 36, but only with a really target at 34.5, so retesting the previous resistance for the price to actually move higher later. So ideally would break out directly, something like this, but it might actually be consolidating inside that triangle. So that's scenario 1. Now about the scenario 2, which is bearish here. The first one, of course, is about the demand, so it's improving a bit, but still well below pre-COVID-19 crisis. So need to keep an eye on this, because any warning coming from China trade war with the US or something like this could actually start questioning the demand recovering. So that could be really bearish for WTI. 35.8, so that level we just saw before, is a solid resistance, and one of the key issues we're having with that level is that it is the top, or actually the bottom of the gap. So when the price went down and crashing down to 29, it did bounce back to that level, roughly 36. So most of the shorts would have been actually taken in that zone. 36 would be probably the first traders shorting from here, so they would close that position somewhere there, but it is very unlikely that we'll see that move further up to be fed by a short covering. I believe the short covering happened during that phase up to 33, potentially we had a bit more to 34, but there's not much left here for this, so we will need some serious buying pressure, and it's coming to the other point, which is actually the net long position. It's already sitting at 380k versus 450, which is an extreme high in terms of their exposure, so they don't have actually much left. So the question for me is, can they have actually enough funds to actually push the price inside the gap and move it to 41? Of course, don't have the answer to this, but I believe it might actually create some issues for the bullish scenario. Another argument as well is that the lack of momentum in the 24.5 breakout and average volume. So we don't have any specific volume, more a bit above the average we have usually, as we can see here. That one was on 29, so we can see it's just barely 1 million, which is nothing extremely high, so that's also a little bit concerning for that move, and we can see it a bit more clearly here that didn't get much volume here, but also the momentum is relatively low, so it's still sitting at 66 versus 73, 75 on previous moves, so that's a bit of a concern. Potential for divergence as well to show, and potential for that candle here, the breakout candle, to be some sort of FOMO in sort of trade with catching all the buy orders here but unable to break above 36. So I'll be also careful with that. So that's coming with the falling open interest that we still add up to the 26, but that's actually we still had some falling open interest during that day here in the drop, so that's more bullish, and then we had the open interest started to increase in that move, so that's more bullish than actually really bearish. But we still need to keep in mind that these moves the week before and even last week, there was also short covering, so not entirely buying based on fundamentals and some expectation about the price moving further up in the coming weeks. So yes, should we actually go for the bearish scenario number 2? Similarly, we'll probably start next week trying to break again above 36, but then we would have some break down here, potentially setting up a divergence. So I wouldn't actually trade the bearish scenario if we don't see any, if we see some momentum picking up, but if it doesn't, then it's potentially a good entry point to be on 36 with a stop loss not too far away there, 37 potentially, and we could see a retracement down to 31 as the first target. That would make it for a really nice trade, but again, at that stage, little bit more inclined to wait for the price to return potentially down to below 34, but starting to accumulate long from 34. Should we not have any reversal signal, or if the momentum is there, there's no divergence, then we would start buying at that level 34 and potentially to play the breakout, but even from 34 to 36, that's still quite an interesting trade with a stop loss that can be set under that trend line. 33 potentially a little bit under this, so 32, it's an okayish trade that could be taken. So yeah, that's about it about WTI. I will make another video because I did take a couple of trades last week. I've been quite interested in, I'd like to do that so I can remember later on what went right and what went wrong, and maybe you can also benefit from it. So that's all for today, WTI, and I wish you first a good weekend, and next week good trading, and I speak to you soon. Cheers, bye.